You hit submit on your tax return and breathe a sigh of relief. But have you ever stopped to think what happens next? In the next few minutes, we're going to pull back the curtain on exactly how HMRC is using your data in the 2025-26 tax year. And trust me, there's a surprising legal twist that allows it all to happen.
Now, this entire breakdown isn't just guesswork. It's brought to us by the brilliant minds at Pro Tax Accountant. These are the experts in the UK who deal with this stuff day in, day out, so their insights are absolutely invaluable here.
Okay, picture it. You've finally done it. Your self-assessment is submitted. That massive weight just lifts right off your shoulders. It's done. It's finished for another year. Time to relax, right?
Well, not so fast. Because for you, it's the end of a task. But for your data, it's the beginning of a whole new journey into one of the most powerful analytical systems in the entire country. And this is where it gets really, really interesting.
So let's go ahead and pop the hood. Let's take a look inside this incredible machine. What exactly is this data engine that HMRC has built?
This system is called Connect, and honestly, the best way to think of it is as a super smart digital detective. It's this massive AI system, and it has just one job: to comb through a literal mountain of data, searching for anything at all that doesn't quite add up.
And when I say a mountain of data, I am not kidding. Connect chews through over 1 billion separate pieces of data. This isn't just your tax return. Oh no. This is about building a complete 360-degree view of your financial life, pulling from over 30 different sources. On the surface, how it works sounds pretty simple. Step 1, it just gathers data from everywhere. Step 2, its AI gets to work, analyzing patterns to build a really detailed financial profile of you. And then, Step 3, it compares that profile to what you submitted on your tax return. If there's any kind of mismatch, even a tiny one, it gets flagged.
Okay, so that leads to the big question, right? Where on earth is all of this data coming from? Let's dig into what makes up your complete digital footprint.
The sheer scale of this is mind-blowing. Of course, it's looking at your bank accounts, your credit card spending, your sales on eBay or Etsy, maybe income from your Airbnb, but it goes so much deeper. We're talking government data from the DVLA, the land registry, even your council tax records. And, get this, it even scans your public social media posts. Yep.
Let's make this real for a second. Imagine a freelance graphic designer. Let's call her Aisha in Manchester. Connect sees the income she declared, but it also sees the payments coming into her bank account. It sees that big credit card payment she made for a new car, and it might even see her Instagram photos from that fancy holiday she took. The system is designed to connect all those dots and ask, does this story match her tax return? And here's a quick pro tip, which just shows you how this all works. Say you did a little cash-in hand job and used the money to buy yourself a nice new watch. You post a picture of it online, caption it, "treating myself." Well, that post just became a digital breadcrumb. It's a tiny little indicator of your lifestyle that the algorithm can flag up against the income you declared. I know what you're thinking. This sounds incredibly invasive. And you're probably asking, wait a minute, what about GDPR? Isn't that supposed to protect my data? Well, stay with me here, because the answer is probably not what you think. Welcome to what we call the GDPR paradox. You see, we all think of GDPR as this big shield, protecting our data from being used without our permission. But here's the twist. For a public body like HMRC, GDPR actually provides the legal justification they need. They don't need your consent because they have something called legitimate interests.
So what is legitimate interests? It's basically a clause in the GDPR rules that says an authority can process your personal data if it's essential for them to do their official job. And what's HMRC's main job? Collecting taxes. This clause is their legal key to the kingdom, allowing them to power up the Connect system.
But here's where it gets a little scary. The AI that's making all these connections, it can be a total black box. We know what data goes in, and we see the red flag that comes out, but the complex logic in the middle can be almost impossible for a human to understand. The algorithm might flag someone based on a weird pattern of tiny late-night debit card purchases combined with their car data and social media check-ins that just doesn't fit their declared job. It's a conclusion no human would have ever reached on their own. And that just raises a massive question, doesn't it? If the logic is hidden away inside this black box, how can you, or your accountant, or even a judge, be sure that the system's judgments about your finances are fair? What happens if you're wrongly flagged? Well, you could be facing a seriously stressful investigation.
Your bank accounts could be frozen, and you're left trying to prove your innocence against a machine you can't even argue with.
So with all that in mind, how in the world do you get through the 2025-26 tax year safely? Okay, let's get practical. Let's look at the numbers and the strategies you absolutely need to know.
First things first, a quick look at the key tax thresholds, which have been frozen again for this year. Your tax-free personal allowance is still £12,570. The basic rate of 20% kicks in after that, all the way up to £50,270. And then the 40% higher rate applies to income above that. Because these numbers aren't changing while wages rise, more and more people are being dragged into higher tax brackets, which makes being accurate more important than ever.
So, let's connect the dots. What does the power of the Connect system, plus these frozen tax bands, actually mean for you? Well, it means your margin for error has pretty much vanished. It's basically zero. Even a tiny, honest mistake, a miscategorized expense, a small sale you forgot to declare, can get you flagged, triggering an automated investigation and penalties before a human being has even glanced at your file.
So, time for a quick Did You Know segment with some critical survival tips. The name of the game is diligence. Use digital accounting software, it creates a perfect, clean trail for the machines. You have to declare every single income stream, because the AI sees it all. And it is absolutely vital to keep your personal and business finances separate. That stops the algorithm from getting confused and flagging a personal purchase as a suspicious business activity. Being disciplined is your #1 defense.
Look, the level of detail you need now can feel totally overwhelming. And that's not all. Here's where a lot of people go wrong. They try to face this incredibly complex, automated system all by themselves.
The simple truth is this. When you're going up against a digital detective and an AI auditor, trying to handle it all alone is a huge risk. You're basically pitting your own human effort against a machine that was purpose-built to find any little slip-up.
The smartest thing you can do is not face HMRC alone. Having an expert in your corner who gets how these systems operate is crucial. For advice on staying compliant, or if you ever find yourself facing an investigation, you should really get in touch with the team at Pro Tax Accountant. You can WhatsApp them or call them on 079-856-89912, or just drop them an email at info@protaxaccountant.co.uk.
And finally, just a quick disclaimer. All the information we've gone through here is for general guidance. Your own financial situation is completely unique, so you should never rely on this alone to make decisions. Before you do anything, you must consult with a qualified tax expert, like the specialists over at Pro Tax Accountant.